Class every Mondays. Okay, we have this class every Mondays about this time. And we just go through some basics of the Forex, various aspects, but we just go through foundational basics. Last month, we went through various aspects of psychology. We looked at the psychology in risk management. We looked at the psychology of the trader himself or herself when they start trading. And we looked at risk management and all that. Okay, so today, for this month, we want to run a series on looking at charts. How can we read price action? How can we read the charts? And my expectation is that by the end of this webinar, you will be able to look at your charts and know exactly what is happening. The key thing for any chart at all, the first thing you need is direction. For whatever chart at all that you bring up, you must know the direction. And you ask yourself, where is the market going? You need to know. Okay. So it's very important to know direction. So direction is very key. And in fact, even in any business at all, the brick and mortar business, you must have a vision or a direction for that business or the product or service you are offering. There must be a direction. Okay, so today we'll look at the concept of basic concept of Forex chart reading, and we want to understand candlesticks, support and resistance, and trends. So we'll have lots of examples that we'll look at. Okay, so what is a chart pattern, or what is a chart, a Forex chart now? So a Forex chart is a graphical representation of price movements of a currency over a certain period of time. So you will hear people say, oh, I'm looking at the daily chart, or no, I'm looking at the 15 minutes chart, or I'm looking at the 1 hour chart. So the graphical representation of price movement within that time frame, that is what your Forex chart is. Okay, and then there are some common types of charts that is very popular. We have candlestick charts, we have bar charts, and we have line charts. So let me quickly go to my, this is my, my chart. I hope you can see my chart. Okay, good. So this is a candlestick chart. It shows. Let me zoom in a bit now, so you can see the white candles are my bullish candles. The black ones are the bearish candles. So you can make them any color that you like, really. So it doesn't matter what color, just whatever you're comfortable with is fine. And then so we said, so this is candlestick charts. We have bar charts, right? They also give the same kind of information. So these are bar charts. You can see how they are. They have, you will see small. So for instance, if we look at this big bar chart here, if we look at this big one here, you see this level here, you see this level here. So that means it opened here, went down, and then went all the way up, and then came back and closed right here. Okay, if I superimpose the normal candlestick charts, you can see how it is there, how it then shows up. It's the same thing. It opens down here, goes down, and then goes all the way up, and then comes back and closes there. So you have those information there. Then the other type of chart that we talked about is the line chart. This one just uses the average closes of all the charts. Okay, it shows us those levels. So so people can use bar charts, they can use candlestick charts. The people who are really brave at heart, I don't know of anyone who uses just line charts, but it has its own advantages, or it has its own appeal as well when you combine it with a particular type of trading system. Okay, so let's go back to our document that we're looking at. So we said we have three types of charts mainly. We have the candlestick charts, the bar charts, and the line charts. Okay, we've looked at those now. So candlestick charts gives us what we call the open, high, low, and close. I'll show us all this shortly. It gives us the open level, the high, the low, and the close. And then of course we have, for candlesticks, we have the bullish candles, we have the bearish candles. Okay, bullish candles indicates that prices are closing higher than when they opened. Bearish candles indicates that prices are closing lower than when they opened. And generally speaking, the candlestick bodies and the wicks, they give us clues as to what the sentiment and momentum of the market is. So let's look at a quick example here. So the anatomy, we're just looking at this candlestick now. It says that there's the open. Okay, let me use black color here now. So there's the open level, the close level, there's the high, and then there's the low. That is what makes up the anatomy of a candle. You have the open, high, low, and close. Or some people just call it the OHLC. Okay, and usually you will see the values of those various levels, the position where it's opened, the position where it was when it went low, and the position where it is when it closes, and then the position where it was when it went high. Okay, you'll see those values on the chart. So let me go back again. We'll be doing a lot of back and forth. Let me go back again to the chart because we want to see how to read the charts. These are some of the elements that we must have in place for us to be able to read the charts. So let's use this same candle that we had earlier. Okay, we'll use the same candle that we looked at earlier. Now, what I want you to look at is down here at the lows there, you will see some figures. You see some figures. So let me bring my cursor. Okay. Now, at that low, you can see there's a letter O, and it says 1.23651. That implies that the open of this candle was at 1.3651. Then the next letter there says H. H is the high. So that high that you have there on that same candle, 1.24365. Okay. Then you see an L there, which is the low point, which is the 1.23818. Okay, that's the low point. Then the C is the closing point. Now, some people inculcate these various levels as part of their trading strategy. So if a price closes lower, then they know what to do next. If a price closes higher than the level where it opened, then they know what to do next. Some use a combination of it. They will say, okay, we'll take 2 candles together or 3 candles together or a series of candles together, and then we'll look at the cumulative high or the cumulative low, and then we then use that to decide where our swing points are. Okay, so let's move on quickly again now. Back to our notes. So candlestick patterns, there are things that we call candlestick patterns. And these are there are many candlestick patterns. There are many. I'm sure some of us will have seen what do we call it now? Candlestick Bible. Is it Candlestick Bible? There's a document, a document that says Candlestick Bible. There are some other ones by Steve Nissen that talks about candlesticks and all that, so there are so many types of candlesticks. You have dragonfly, you have the Hurame, you have the Morning Star, you have the 3 Crow, and you know, all sorts of candles stick patterns that you can use. However, thankfully, because you are in this webinar, you are just going to need to know just 3, only 3 candle patterns. Just memorize those 3. And once you know those 3, you are good to go for any kind of trading system at all. You see how we are simplifying this trading for you. Okay, so we have the first one is engulfing patterns. Okay, and engulfing patterns indicates strong reversal signs when one candle fully engulfs the other. I'll show you this pattern, what it looks like. Okay, the second one is what I call kangaroo tails. So some people call it hammer, some people call it evening star or morning star, or you know, they call it all sorts of names. Anything that has a tail is a kangaroo tail for me, right? So it simplifies it, and it's usually a reversal pattern. We'll see the example of that shortly. Then you have the dojis. Now, these dojis are indecision candles, and usually they are dojis happen, or spinning tops happen when a candle opens and closes near each other. Okay, so let's look at the examples, these examples now, so that we can get better with this. Okay, so I'm looking for where's my button? Okay, I've seen it. Okay, so we have engulfing candles. This first one here is the engulfing candles. Okay, so engulfing candles, you can see the body of that candle closes the body of this next candle here. So assuming price has just been coming down and down and down, so red means bearish candle in this instance. Then you have this big candle that the body engulfs the previous candle, right? Now that body that engulfs that one, that is an engulfing candle. So this is now called a bullish engulfing candle. The converse is also true for when you have price going up and up and up like that, and then you have a bearish candle that engulfs the other candle. So it's called a bearish engulfing candle. Now, these are samples of my dojis, of kangaroo tails. So you can see tails here, tails. You can see all the tails, different types of tails. You can see tails at the top here as well, different kinds of tails. So as long as it has a long tail, is a kangaroo tail. Okay, and then you have the dojis, the next one here. So you see, it has a tail. In fact, they have tails at the highs and at the lows. They have tails at both ends, and then the body is very small. That is how you know what a doji is. They are indecision candles, right? Once you know these 3, only these 3, you are good to go for any kind of chart reading that you want to do. Okay. So then the next thing we need to do now is to know the market structure. That's the next thing. Now, markets moves market has just 2 states, just 2 states. It's either a trending market, or a range-bound market, or we can say a consolidation type market, or a market that is moving sideways. So there are just those 2 states. Now, within the trending market, you can have an uptrend or a downtrend. And then, of course, it's been universally agreed. Okay, somebody wants to go through. Okay, we'll go through the engulfing candle just shortly now. You will see that. We'll go to the chart so you can see them very well. Okay, so the uptrend. So for an uptrend, you have something like this: price moving higher highs, higher lows, higher highs, higher lows, like that. Okay, it's moving up. And then for a downtrend, is the opposite. Let me remove all those down. So for downtrend, it's moving lower lows, lower highs, lower lows, lower highs. Okay, I'm sure by now you are used to those terminologies. Okay, and then it says recognizing these patterns will help you to accurately will help you make more accurate trade decisions. Okay, so let's just quickly look at those engulfing candles again before we go to the charts. So engulfing candle, for me, the way I define it is that the body of the previous candle is engulfed. Once it engulfs the body of the previous candle, it's fine. Some other people insist that, okay, their own engulfing candle, it must engulf both it must engulf the candle completely. That's both the wicks or the tails, that the next candle there must engulf it completely. All right. But for me, I just look at the body alone, and it's sufficient for me. And you'll see the reason why shortly. Okay, so let's okay, so it's now time to go to the charts. All right, so let me show us the charts, these charts now. Okay, you can see that generally speaking, these charts from let me use from this level here, where my yellow line is. Oops. Let me redo that. Where my yellow line is now, or let me even use a line instead of using that. Okay, so from this level here, let's change that color to yellow so it's bright. Okay, let's use a bigger one. Okay, from this level here down to this level down here, what would you say is happening between here and here? Would you say it's an uptrend or a ranging market or a downtrend? What would you say? I want to see in the charts. What do you think? Okay, thank you. Yes, downtrend. Do we have any other person thinking is an uptrend or a sideways market? Okay, good. So you can see it for yourself. So what we want to do here is what we are going to work like scientists here. Though recording in progress. Oh, so sorry about that. Let me do just a sec. Okay, so let me quickly bring back the charts. Network, eh? Okay, so can you see my charts now? Okay, thank you. Yes, we're back now. Okay, good. Thank you. Sorry about that. The thing just then suddenly, well, whatever it is, network, sha. So thank God we're back now. Okay, so what we're looking at now, we said that we need to look at it from a scientific position. So what we want to do, we want to see, given that they say, even in life, they say history repeats itself. in trading as well, the charts, the candle, the charts usually repeat themselves over and over and over again. Okay, so now I want you to see if you can notice between those two levels that we marked just now, and here, and this low here. Those are the two levels we marked. Can you see those engulfing candles that we talked about? Look at here. You can see a spinning top there, right? Look at this one. You can see an engulfing candle, right? There is an engulfing candle here. There's a big candle here. You know, I'm skipping some of those candles. I'm just highlighting, you know, some of the candles that you can see. Right. So now we want to see how can we, given that this is a downtrend, how can we have a repeatable process that we can always look at and use that as our framework? Now, I've already put this fractal in. I want to remove it. Let me put it back in again. So it's just called fractals. Okay, and those fractals, they just show the swing high or the swing low of a particular set of candles that you take. Okay, so what we are going to do is that if price breaks above a fractal, then we'll follow that as our, so this is a trading system actually now. Is if price breaks above a fractal, then we are going long. If price breaks below a fractal, we're going short. Okay, we want to put a framework to it. So okay, before we use fractals, some people will use, say, moving average. Okay, they can put a moving average and just say if price closes below that moving average, okay, they are going to sell. And then if price closes above that moving average, then they will buy. Okay, now so I want to just let's use the fractals and see how it goes. So from here, we don't have any fractal for this. The first fractal we have is this one here. Okay, now you see price came here on this candle here, price closed below it, so we're going short, right? So we go short, we go short, we go short. This is our range. We're looking between here and here. So price is going something like this. It pulls back, it comes back in, it pulls back, it doesn't close, it doesn't go above the last fractal that we're doing. It's still going down. So all we're doing here, we're just following the fractals, right? We've not had a close above the last fractal until we get here on this candle here. So when you look at it, you can see that there's a fractal here and there's a fractal here. But when price then moves up, instead of it to continue downwards, what does it do? It takes out that last fractal there. Okay, then we begin to go long. Okay, so we go long, and then we come back here. So between this level here, you can see between this fractal here and the last one here, that is our space that we're looking at. I don't want to use some of the terminologies that we use in our coaching classes. Anyway, the terminology we use is range, so a valid range. So, but I don't want to use those terminologies here. Okay, so this is the area we're using. Okay, so as soon as price breaks that level, okay, then we begin to go short. Right? We begin to go short. Okay, so that is one process. Now, let me give you another, in case you weren't able to follow that very well. Let's see what happens if we use what we call zigzag. This zigzag, I like it because it just highlights price action. So I'm using 453 as my level there. Okay, so can you see price came all the way? Can you see this zigzag thing going? So you just keep following that price action. You just keep following the price action the way it's going. Then as soon as you get a break, here. Look at this candle here. It breaks above. Then you change direction and then go long. Okay? And then as soon as you then get a break down here, you then go short. Can you see how simple it is to look at your price action? So you don't need to be jumping from one trading system to the other. You can use your eyes to see it. Okay. Now let me give you another shocker. I'm going to change this chart. Now, okay, let me even zoom. Okay, we'll use. Let's see this. Okay. I want to start from somewhere. I just want I want us to see something. Let me first remove this. Oh, okay, I could leave it actually. I could leave this zigzag in since we're already using it. Let me reduce that so that it's not as big again. I'll just reduce it a bit. Okay, so look at this. So if we're using zigzag, all right, using zigzag on this time frame, look at what price has done. Let's say we're starting from here. We're starting from here, right here. So where is our marker? We're starting from here. Okay. Now, what do we see? So price, the zigzag is between here and here. This is the first zigzag, right? Okay. Now, price then goes below it here. What does that tell us? Our hypothesis is that if price breaks below the zigzag that we're using, or whatever trading concept or trading plan that we have, then we follow that. So in this case, we're using this zigzag. Now, as soon as price goes below that, then we know that the next thing is that price pushes up and then comes down. So we're selling, right? Then price goes up again, comes down. We're still selling because it has not broken the last high. It has not broken the last high until it gets here. Okay, when it gets there, what happens? When it gets here, what happens? Where is our area that we're looking at, or where is our valid range? Let me just give you that expo. Where is our valid range? Our next valid range is between this high and this last one here. So that means we're looking for buys. Why? Because it has broken this high. Okay, now so price comes in, goes back, so this is still intact. This is our range, is still intact, and price goes higher, which is good for us. Okay, then what does price do next? It comes all the way and breaks this level here. Once it breaks that level, what does that tell us? It tells us that price wants to move down. And does it move down? Yes, it does partly. So once it moves down, so our next range is between this high, and then price goes all the way, then does some meandering. Eventually, what does it do? It comes back up and breaks this last area here, showing a change in direction. Okay, now are you following me like this as we're going? Are you following? Put a 1 in the chat box if you are following. Just put a 1 in the chat box. Okay, beautiful. So you can see there's no need to be running from one system to the other. So between this level here now, once it breaks it, what does it do? What do we do next? Because we have put our trading rules in place, we have said as soon as it breaks the zigzag line, then we'll go in the direction of that zigzag. So it breaks it here, and then what do we do next? We just wait for this pullback. It comes in, and then we go again. All right. Then the next one here, you see that it clearly breaks it here. Then what do? We just enter on the next candle and go down with it. Okay. And we just continue repeating that process over and over and over again, right? We just continue repeating it over and over and over again until we get to the end of the day, or we get the kind of profit that we want. Look at this nice trend upwards here. Look at it, came down to this level and then broke this one here. As soon as it broke it, when we're ready to go long, right? Can you see how it's just going? It's giving us higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, right? It's just going all the way. Now, I want to give you a little shocker. Who can guess? Okay, let me use something to break it here now. I'm going to cover it up, so I don't want you to see it. Who can guess what time frame this particular chart is on? Is it the daily chart? Is it the 4-hour chart? Is it the 15 minutes chart? Just guess. What time frame is that? Ah, okay, somebody. All right. Is okay, good. I'm getting some good responses there. Okay, good. Now, I'm not going to change it. Let me remove this man here. It's actually the 1 minute chart. Right? This is the 1 minute chart. But just look at this. We just traded on the 1 minute chart. But what do some gurus tell you out there? Oh, 1 minute chart is too noisy. Oh, you can't trade 1 minute chart. It's too sharp. It's too this. It's too that. All you need is, if you have a trade system that can trade on the 1 minute, then go ahead. It doesn't matter which chart you're looking at. Look at the one we looked at initially. This big one here was the daily chart. Right? And we use the same process. We use the same concept. We said if price breaks below or above the zigzag, then we'll go in the direction of that zigzag. So the same concept that we applied to the daily chart, we applied it as well on the 1 minute chart. So it doesn't matter which time frame. You know, some people will ask you which time frame is the best for you to trade. It doesn't really matter. What matters more is the trade system that you are using. Okay, so that is how you can look at any chart at all and trade it. Any chart at all. You need, but the basic thing you need to have is a trading concept, a trading process that is repeatable. It must be repeatable over and over and over again. So you see how we just repeated from a daily chart. And even if we wanted to go to weekly charts setup now, let's look at this weekly chart. Okay, look at this weekly chart. You can see the same thing happening over and over again. Okay, price came down from this level, went all the way up, came back down, went up here, broke here, right? So we're looking to go short. However, what happens? We get stopped out, right? Once we get stopped out, okay, we then go the other direction. We see that it's going up now. It then goes up, and then it comes here now, it breaks it. This is the weekly chart, right? Can you see that it doesn't matter which time frame you are trading? You can trade any time frame that you like, as far as you have a process. As far as you have a process to trade, you can trade any time frame. So you don't need okay, let me see. Do I have any? Oh, okay. Let me put this one here. Can you see this one here now? Now this is weekly chart. This is Bollinger Bands and some other indicators. I don't use these, but I mean, just look at it. Some people will give you a process. You can carve out a process on how to use this. Okay, let me see if there's any other one there. There's something called momentum. Okay, look at, some people will use this as well. But the important thing is that you need to have a repeatable process. Okay, and that's why I just like clean charts like this. Just clean, and then I can apply either these fractals that happen, or I apply the zigzag to it. Where is zigzag now? You know, I apply zigzag to that time frame. Okay, so it's very important that we do that. So let's see. Let's open the if you have any questions, let's see your, please just raise your hand and we'll. So we are done really. So that is how you read the charts. Okay. Billionaire Hamdia, please go ahead.
Hello, sir. Good evening, sir.
Good evening.
Thank you so much for that wonderful presentation. God bless you.
Thank you.
These terms, what is it? What is this going long and going short? I don't normally, I've been hearing, because I'm a I'm a rookie. I don't
Okay,
usually understand what.
very good. Okay, so when we say we're going long, that means we are buying. If we say
Okay.
we're going short, that means we are selling.
Okay.
Okay, so if I go to, let's say if 15, okay, if I'm, yeah, so for instance, now this time frame here that I'm on, if I, no, let me go to the clean chart. I want to use a clean chart.
Okay.
Okay, let's see if that one
Sorry, sir.
happens. Oh, okay. Anyway,
Sorry, sir. You
so
said
you see,
the
like
long is
this
to
chart I have
buy.
here now. Yes,
Long is to buy,
long is for buying,
and
short is
short
for
is to
selling.
sell. Thank you so much.
Yes, for selling. You're welcome. I think I saw. Where's my dear sister? I think she was raising her hands up just now.
I did. Well done, billionaire Jeremy. Well done. Fantastic. Thank you so much. I just wanted to ask, you know the zigzag indicator, is it part of MT4 or do you have a separate one?
Right, good. Thank you.
Hello?
Yes, this is part of it's all on MT4. Zigzag.
Oh, okay.
You have zigzag on MT4 as well. In fact, you have
Okay.
it on any platform at all that you use.
Okay. Okay, I'll have a look. Thank you. That was all. That was really good. That was all. Thank you.
Lovely. Thank you. Oh, Mr. Shola, billionaire Shola, let me unmute you. Okay.
Okay, thank you so much, billionaire Jeremy. Thank you so much. You are making this much more easier for us, to be able to. Yeah. So, how do we? So I try to look at the zigzag on my MT4 now on FBS. Although I was able to find it eventually, I was asking initially, but I noticed that you use some numbers, some values.
Yes.
What value?
So you can use any number. So it comes by default. It comes with
1253. I saw. So I open it now.
3 rather. Yes, it comes with 1253 by default.
Okay.
However, you can. So if I use 1253, I just see that it's not as is it as responsive.
Okay.
So this is the 5 minutes chart with a 1253. Okay. If I now change it, let me see. Just a sec. Okay, so if I change it to 453, it looks like the optimal for me.
Okay.
Yeah, so you can use any combinations that you want, but you just look at it and see. The important thing is that put a process in place for it.
Okay, I don't understand
a process. Yes, go ahead.
I don't understand what you mean by process.
Okay, so just like we said, that the process we want to use when we use zigzag is that if price closes above a zigzag, okay,
Yes.
just like we have here now, if we have price close above a zigzag, then we'll go long. If price closes below the last zigzag, then we'll go short.
Okay.
Yes. So like this chart you're looking at now, You see, it came all the way to this level here, to this top here.
Yes.
By the time it got here and closed below it, then I'm going to start to go short. I'll start selling.
Okay.
Yes.
Okay.
So
So
it's
what's
showing you
different?
the, yeah.
I wanted to ask, so what is different between this and moving average?
Okay, very good. In fact, a very good question. So let me bring moving average here now. Now let's say we are using, which time frame is this? This is 4-hour chart. Let's say we are using 50 moving average, 50 simple moving average applied to the close. Okay. Now, can you see this moving average?
Yes.
If we say our rule for this moving average is that if price is below it, then we will sell. Okay, so we are going to be selling all through this level here. Maybe we'll buy here and then we get stopped out, but we sell all through these places. We are just selling until it then gets here, this level here, before we buy. Okay, now, but can you see the sensitivity of this moving average compared to the zigzag as per, when price is changing? So look at this now. So for this moving average now, we are selling from this level here. We are selling from this level all the way to this place.
Yeah.
Okay, for selling. Now, but look at the zigzag. Zigzag came to the lows here. So we're actually selling too in alignment with the moving average with the zigzag all the way. We are selling all the way. But look at from this low here, it went to this high, came back down, right? Then broke this low here. Okay, so you see, it works closer in line with the price action. So it's breaking it. As soon as it breaks it here, then we begin to buy.
Okay.
Okay, so we will be going to buy. We'll enter on a pullback, put our stop loss either down there or down there, and just wait for price to do its thing.
Okay.
Okay, so if you are more comfortable, using a moving average or just waiting for that moving average to work, that is fine as well, because the system overall, any system at all works. Any system, it will work and it will give you your profits, right? The only thing is that how close do you want it to be to your price action? Okay, because somebody else may say, okay, I don't want a 50 moving average. I want maybe a 200 moving average, for instance. Okay, which that one will even tell you, it's just selling all through.
Okay, so the number value determine how close it is to the
exactly. So another person may use a 10, for instance, and then you begin to have, you buy here, you sell, you buy, you sell, you buy. You just be going up and down, up and down, up and down. And it can be very tiring.
Okay.
If you make the moving average too close, you just be having every little candle will be giving you signals to buy or sell, and you don't want that. You want something that is that is flowing, that is consistent. You don't want to be, you buy now, you sell, you buy, you sell, you buy, you sell, except if the person is using a robot.
Okay.
Yeah,
thank you. So sorry, the last one, there was another indicator you showed us, and I can't remember what you call it now. The one that is like arrow on top, arrow down.
That is fractal. It's a fractal now. Yes. So if you go to the indicators under Bill Williams, fractals are usually under Bill Williams. You see fractals there.
Okay.
Yes. So fractals also just depicts, it's just another way of showing, how price is moving. It shows the swing levels. So let me remove this zigzag. You see, it's moving very closely with the zigzag. Okay, so let me remove zigzag. Zigzag doesn't want to go. Okay, so zigzag. So what usually happens is before you get a fractal at the high there, you need to have three. It considers 3 candles. So a fractal is formed when there's the middle one. So between these three candles, this middle one is the highest, has the highest high.
Okay.
Okay, and the next two the candle before it and the candle after it does not come to that high. The same thing happens for when price is going up. You know, when this one is about to go up. This one is when price is coming down. So when price is about to go up, this low here, this first, the candle before it and the candle after it, this one must be lower for it to then begin to go higher. So you then would then call this one a swing point.
Okay.
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 Good. Do we have any other questions?
I have plenty. Can I go ahead and ask? Okay. So at what
No, please
point?
go ahead. That's why we're here. Please go ahead.
Okay.
Ask your questions.
So now, looking at the trade, I think this is a live trade you are showing us now. GPB USD looks like a live trade. Am I correct, sir? Hello, sir.
Sorry, please come again.
So I'm asking, I said, this looks like a live trade you are showing us.
It looks like a lifesaver.
A live trade.
Yes, this is live actually. Yes.
Okay. So one of the challenges I've been trying to see using my demo to practice some of these things. So he's been able to the stop loss and then the take profit. So I don't know if I'm moving it too close to the what do you call it now? The entry point, the entry price. If I'm moving especially the stop loss, if I'm moving it too close, I don't know, because before I know what's happening, it takes me so I used 15 minutes time frame to enter.
So give us an example of a pair.
So I've been doing more of Euro USD. Then there are times there are like today I did Euro USD. There are times I did like on Friday I did Aus USD, that's gold USD. And I made profit in the morning. Can you imagine? I made profit in the morning. And I said I was done enough for today. Then in the afternoon, I just checked again. I saw the thing is still moving well. I said, let me enter again. That was like it cleared all the profit I made in the morning.
Okay, so let's look at this is Euro USD, and this is what has happened today. It started from here. Okay, so this is Asia session. Okay, so if we use those, let me bring back my zigzag. Okay. Right, so look at this. So supposing you started trading during London session, maybe somewhere there. Okay, so you come to your charts and you look at it. What is your zigzag doing? It started from here, went up, came back down, broke this level. So you are saying to yourself, okay, I am selling, right? As long as price does not break this high, yes, I am selling. So it goes up, comes back down. Okay, then goes up again. And now let me see if it's at the same level or if it's okay, it's like a double top there. Okay, so let's assume that we're still good for a sell at this level here because it's about the same thing. They are equal highs. Okay, it comes down again. Now, when are we going to change direction? As soon as this level is broken. So it breaks it there. So this is now your, let me see, what's the time? This is about 9 o'clock or so on this server on the, yes, about 9. Okay, so this is London session. Okay. So that means you have a change in direction here. So what you will do is to take between this high here and this low, you are going to enter for a buy. So you then go long. And then once it gets to this level here, where is your next range? Your next range is between this high here and this low here. So as long as price is between this here, this range here, you are just buying. Because if you remember how we say price moves, it moves from a high to a higher high, pulls back, goes higher, pulls back, goes higher, therefore giving us a series of higher highs and higher lows. Okay, the only time we'll say that this up move has changed direction is when it then comes back down and breaks this last swing here. Okay, so when you put your entry, say somewhere there, your stop loss, your ideal stop loss should be down there, where the trade is invalidated.
Okay.
Okay, you put your so when you look at it, looking at this chart here now, sorry, the drawing I made here, if you are going to enter between here and here, if price is right here now and you're waiting for this pullback, when you enter on any level here, your stop loss will be down here. Okay, and then you leave it to move. Once it starts moving, your first take profit target should be this last high.
Okay.
So once it takes this last high out, you can then perhaps move your stop loss a little bit.
Okay.
Okay, so because this will now be your higher low in an uptrend. And the same thing also happens in a downtrend. It will always follow that sequence. Higher highs, higher lows, higher highs, higher lows, or lower lows, lower highs, lower lows, lower highs. Okay, it will always follow that sequence. There will be times when it will do what it wants to do. It will take out the high, it will take out the low, but that doesn't happen always. You just want a one-off.
Okay. So
I hope that helps you a bit.
Yeah, it does. It does. Thank you so much. So where does the position calculator now comes in? Position size calculator.
That one is for those who are in the course now. You're in the course now, so you get that one.
Yeah, I know. Okay. I thought everybody is in the course. So, sorry.
No, this one is general class.
Okay. Sorry. Okay, I will ask.
We'll discuss that one in the course itself.
Okay. Thank you.
But just to answer, in case people are looking at it, your position size calculator comes in. So when you agree that this zigzag here has been breached here to the upside, so you put your entry. So if you put your entry right here, you put your stop loss right there. But let me bring the position size calculator. Oh dear.
Sorry for that.
No problem at all.
If you are not in the class, you should come and join us so you get some of these things.
Abi. So this blue line here is my entry. This green line here is my stop loss level. Okay. And then this one here is the yellow one is my take profits. So if I do 1-for-1, for instance, okay, and I put it in. Now this account has so the risk management there. I'll say, okay, I want to risk just 1% of my account or 1.5%. Okay, so once I put that in, it will then trigger it. Okay, it wants me to enable the thing. Okay, so I've enabled it. Okay. So once I put it in, it will then just automatically calculate what lot size I need to put in. And then it just puts it in for me. I get triggered and then my trade goes. Okay. I've also said that on times when you don't want to do just a one trade, you can break your 1.5 risk into 3, right? According to this position size calculator, you need 0.15. So instead of doing that, do 0.05. Okay. So your 0.05, you split it into 3. So that your first take profit is here, your next take profit is there, maybe the next one is right at the top there. Because you're envisaging that price will be going up.
Okay.
So you then be taking the profits little by little by little like that.
Okay.
Okay, so let's not give them our origin again.
Yeah, thank you. Let them come in and register.
Okay, any other questions?
Thank you so much.
Wonderful. Okay, so we'll call it a day here. Oh, okay, Hamdia, please go ahead.
Thank you so much, sir. You said there's something I grabbed and then I missed it. I've missed that point. You said when you when using the zigzag, that anytime price breaks below the zigzag, what do you do, sir?
Okay, let me show you something. Okay, I want to put line chart in. And I'll make this color, let me make it gray as well. Let me remove these fractals and remove the. Now, can you see these charts?
Yes, sir.
Okay. Okay, we want to use the one that goes below it. Okay, let's look for one that goes below. Okay. Can you see how price is moving? From here, it goes up, goes down, goes up, goes down, goes up. Okay. And then it breaks it here. When it breaks it here, what does that tell you? It tells you that it's ready for a sell. So as soon as that candle closes at that level, then you enter for a sell to then continue to go downwards. You see that this zigzag is actually showing you when price is moving up or moving down. So it's showing us higher highs, higher lows, higher highs, higher lows. Okay. Or lower lows, lower highs, lower lows, lower highs.
Okay.
Okay. Thank you very much. Okay,
yes,
go on.
So you said when price opens, I just want to grab that one. You said when price opens below the zigzag, you sell, or
when price closes.
Okay. When it closes below the zigzag, you sell.
Yes.
And when it opens above the zigzag, when it closes.
Okay, let me just repeat that. So let me remove this. So you can see how this zigzag is.
Yes.
Right. Now let me put back those candles so you can see what it is. So can you see this candle here?
Yes, sir.
Can you see that it closes below this last low here?
Yes.
Yes. Okay, good. That means once this candle closes, this is actually the 15 minutes chart. Once this candle closes, you are free to enter a sell.
Okay.
And you put your stop loss at the top there, at the swing high. Okay. So you enter your sell, and then you go with it.
Okay.
Yes. And then the same thing happens for a buy. Let me look for this one here. Look at this candle here.
Okay.
So price went zigzag like this, down and then up to this level. It then breaks this level here when you stretch that horizontal line that way. That means once this candle closes, you are allowed, according to this trading rule, to enter a buy. And then you put your stop loss at the low.
Okay.
So that you go up with it.
Okay.
Good.
So thank you so much, sir. So I beg you, don't don't mind me. I beg you, don't get bored. When
No,
you
not at
say a price has broken the previous, they say, what does it mean?
Okay.
It means it has gone higher than that, the previous high, right?
So I'm going to use exactly when it's done a higher high. So look at where this candle is. The high of this candle here. Remember we talked about open high, low close.
Close, yes.
Okay. So this candle here is the highest candle in this zone here.
Okay.
Now look at this candle here. Look at this candle here. These two candles that I just marked here. This one already spiked this high. It's already gone above it.
Yes.
Giving us an indication that price may likely go higher. Then the second candle, the body of the second candle actually closes above that horizontal line.
Okay.
So for me, this first candle is confirmation enough for me to enter a buy. But some other people say no, they want to see a body close above the last swing.
Okay.
So whichever one you use, you will get your profits. I mean, you get your trade entry.
Okay. All right. Thank you so much, sir. So how does one how is one this one looks like a resistance or the line that you have drawn?
No, just don't get confused with. Just leave it as it is. I just used it
So
as a level.
An example. Okay.
Yes, you can see it's a resistance level because price came up here, tried to go further, could not go, went down, came back up again, tried to go further, could not go higher, came back down until it got here before it broke it. So you can call it a resistance. But I want to run away from all these nomenclatures and all these things that people call around.
Okay.
Just know that is a high. This is a higher high.
Okay. So thank you so much, sir.
Welcome.
So let's say on the MT4, the MetaTrader app, for instance, by default they are just candles, probably with a moving average same this thing along the candles.
Yes.
So how do I apply these? I could just leave it like that without bothering myself with the support and resistance, and apply this
Don't bother yourself with support and resistance. What you can do with that one is to use fractals, because the fractals will also give you the same thing as your zigzag. So if you go to, okay, let me use my phone so that I can see it. I need to stop sharing here.
All right, sir.
And then go to the phone. Let me share phone. Where is it now? Just a sec. Share. Okay, share screen. Okay, so let me bring my MT4 up.
Okay.
So this is my MT4. Let's use pound USD. Okay, so on this pound USD, what I'll then do, can I see the F symbol at the top?
There, sir.
Yes, okay. So that F, it then shows main chart. Then you have an F with a plus beside it.
Yes.
If you click on the F, then scroll down, you will see fractals somewhere. Let me look for fractals. under Bill Williams, there's fractals there.
Okay, yes, fractals.
Okay, and then I'll use the pixel. I'll use the highest pixel I can get for it, and then put it in. So I go back to the chart. So can you see those fractals now?
Which ones are the fractals? Okay, some arrow.
Exactly.
Okay.
So those ones will now act as your own zigzag.
Wow.
So let's go to that. Let me put Euro USD. I don't have Euro USD with that. Okay, so Euro USD. Which chart were we looking at earlier? This Euro. Okay, it's here now.
Okay.
So for Euro USD, let me use my arrow line to chase it down. If you can see the arrow line. So you see price moves up to this level, came up here. Can see the blue fractal goes down and then goes up again.
Okay.
So as soon as it breaks it here, I'm ready to start going long. Okay.
That's buying.
So I just enter my long. Yes, a buy. And then I'll just use that to go up with it. That way.
Okay.
Okay.
But at what point? Because when where it has broken it, another red candle has appeared beneath it.
Doesn't matter. What we're looking at is the kind of where our swing points are.
Okay.
So in this case here, where it started from, this is where it broke this last level. So this is the last high.
Okay.
And that got broken here on this candle here.
Okay.
So if you now trace it backwards, where is your swing low? Your swing low is down here.
Okay.
So you put your stop loss down there.
Okay.
You put your entry maybe at the close of this candle.
Okay.
Okay. And just leave it. Let it go into profits. So it's either it will stop you out down here or it will go up into profit for you.
You don't need to put in take profit.
No, you put profit levels.
Okay. Okay.
So that you just go with it. So once it goes higher, you can take some profits, partial profits. When it comes down, you can even add some more, and your stop loss is still down there. And then when it goes up again, then you go with it.
Wow. Wow. This is indeed an eye opener. Thank you so much, sir. So with this one alone, you are done. You are okay with you are okay, even without support and resistance line. Thank you so much. So my last question, sir. With this, I can see it's on the 15 minutes charts time frame. Can you still use I don't know why I'm addicted to 5 minutes time frame. Can you still use the 5 minutes, or it works best with some particular time frame?
It works with any time frame. Remember at the beginning, I showed us an example of a trade using the daily chart.
Okay.
We were looking at the daily chart, and then we went all the way down to 1 minute chart, and it made no difference.
Wow.
The key thing was that you need to have a process, your trading system that you use.
Okay. Okay.
Okay. Billionaire Shola, I saw your hands up earlier.
Thank you so much. Thank you so much, sir. Thank you.
Welcome.
Can we get a recording of this so that we'll watch it over again?
Yes, you will. You will.
All right. Thank you so much, sir. Thank you. God bless you.
You're welcome.
Yes, sir. So I wanted to ask a question, but I think it shouldn't be. I should ask you when we are through.
Okay. Okay.
Yes.
That's fine.
Thank you.
So thank you all very much. Where is my button now? Let me stop recording. Okay, so Our next class will be next week, Monday. But I believe Billionaire Victor is going to teach us some things on Wednesday. So be ready for the links for that one. Okay.
Thank you so much, sir.
Thank you also
Thank you
very
so
much.
much, sir. Have a lovely evening.
Thank
Good night.
you. Have a lovely evening.
Good. Thank you. Bye.
So, do I
Bye.
stay here or I should call you on WhatsApp, please?
Yes, we can talk on WhatsApp.
Okay.
I'm trying to look for the button that does the this thing has gone off. Oh. Where is the stop button?
Where you have your leave, like a leave door down.
Okay.